Hi there. I want to give you a brief market update and economic update about what's going on. We're seeing right now in the marketplace. Pretty confusing for a lot of people, but what we're getting is what they call a melt up. There's no reason for people to sell stocks in here. Corporate earnings have been better than expected. In fact, last quarter, 75% of companies exceeded expectations, kind of what I expected. I've been talking about this for months to say. 3 or 4 months ago, I said we would have a pre-earnings nap, which would pull markets down, hopefully in the 6 to 8% range, which we saw in October. We got a full 10% correction, at least on the futures. The Dow and the S&P got it down about 9%, 10%. That counts as a 10% correction. First time we've had one in a couple of years. Therefore, I think the markets are looking good for a number of reasons. Corporate earnings have been very positive, which is essentially what drives stocks higher. No inflation. This is critical. Now, no inflation is coming about from several different reasons. We're having multiple industrial revolutions going on. In the 1820s, we had the steel and textile revolution. Then we had electricity about 100 years later. This is the same type of industrial revolution that is changing the game. It's changing the world. It wasn't available when I wrote in my book, Facing Goliath, How to Triumph in the Dangerous Market Ahead. It's a game changer. We're seeing multiple industrial revolutions. We're seeing it in healthcare. We just saw from a company this week who has maybe potentially an Alzheimer's drug. Obviously, technology, computers and software are replacing individuals. Not good, of course, for the individual losing their job, but making companies more efficient. Companies were able to refinance their debt to incredibly low levels in these low interest rates. We're seeing a biotech revolution. And really a big one right now is energy. We're seeing gas at about $65. Oil is about $65 a barrel. That's half of what it was a couple of years ago, down $20 or $30 a barrel just in the last few months. That's about $1 off the price per gallon. That's a huge tax benefit, a huge gain to every consumer. Every one of us has more money to spend in the economy, and therefore it helping keep inflation and create deflation. Now, as I've mentioned, there's negative deflation, which I write about in the book. We have an aging baby boomer who's past their peak spending years, and the economy slows because there aren't enough spenders. And then you have deflation coming about, which is a positive deflation because of a revolution of sorts, where companies are making money and prices are coming down because of this, and that's what we're seeing in energy. Energy is slowing in cost and price. It's part of it because Europe, Asia, and especially Japan is really slowing down. Therefore, they don't buy as much oil and gas, so they don't drive as much. That also sends a lot of money to the U.S. to buy U.S. government bonds, which keeps inflation down and interest rates down, and also helps our stock market because our stock market essentially is, it may not be perfect, but it's the least ugly girl in an ugly girl contest, and that's what's happening here. So lower oil prices is very positive for the economy. Again, this isn't throw caution to the wind. Always invest for need, not for greed. Build a portfolio that gets a reasonable rate of return, which is what we do for our clients every day. You want a reasonable upside. You're not looking for all the upside because with that comes all the downside. And as you plan for retirement or are retired, you cannot replace this money. It's not just, hey, how much can I make? It's how much can I afford to lose and how much am I willing to lose? And of course, nobody wants to lose anything, but of course you need to let your portfolio give it room to breathe. But the key is to invest appropriately based on what you need. But long story short, I am positive on the stock market at least through the end of the year. We are due for a fairly good-sized correction at some point. I don't know if we get it. Maybe when interest rates start rising, the Fed might just decide to raise interest rates just to see what happens. There's no inflation. That's typically why you raise inflation. They might test the waters and bump up the Fed funds rate a quarter, half a point, just to see what happens, not because there's inflation, although I don't think so, because I think that would slow the economy down and create a negative inflationary situation where the economy would slow. Right now we have moderate growth, low or no inflation or deflation, which is very positive. And so what you don't want a situation is deflation, or like Japan where prices always decline. You want people to have money, be able to spend it on things that are growing slowly but not overwhelming. So I think things are fairly positive through the end of the year. Of course, no guarantees, but that's what I see. Maybe through the first quarter. And then we'll see if the Fed starts to raise interest rates. That might be the catalyst for that correction, which we're overdue for. Remember, corrections, anything over 20%. And bull markets, you get corrections of 20, 25, 30% in every bull market. Doesn't mean it's the end of the world. It's just a natural occurrence. Whether we get it next year or the end of next year or the year after, I don't know. It might be when the Fed starts raising interest rates. You never know. But in the short term, things look fairly positive, and I look for the market to continue to melt up. So, of course, call me with any questions if I can help in any way. Hope you have a very happy holidays. I'll be writing probably one more newsletter or a couple more newsletters, maybe one more video before that period, and I'll talk to you soon. Thank you.